Now this is very important topic because this is basically module B of BFM, and this part comes as a risk management part. The total module B is based on risk management only. How it is achieved, what is the framework, firstly what is the risk, we'll study all this. So beforehand, download Adda 24/7 app on your mobile. In this app you'll be getting the premium study material, current affairs, job alerts, live classes, plus notes, tests, whatever you need for JAIIB, CAIIB and various banking exams, you'll definitely get it over here. Okay. Also, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting two important things. One, you will be getting the updates for JAIIB, CAIIB and various banking exams. Okay. Second, you will be getting the free YouTube series. Now, free YouTube series means whatever is on all the topics of JAIIB, CAIIB. Okay. So you'll get it over here. So why do you go here and there, isn't it? Yeah. These are the two new batches for English and bilingual. Just now started December 26th, so you can definitely join. Recorded videos are available. Also check out for other batches as well. Okay, so more on this later. So what is the schedule? Risk in banking. What is the risk in banking? Secondly, risk management framework. Why only banking? You can consider what is the risk in the business as such, isn't it? Because banking is after all a business. And third one, we'll be considering objective questions. Okay, so what is the risk basically? Risk is organizational risk is potential for losses due to uncertainty. Now always I'll ask you a simple question. If somebody goes on the 5th floor of a building and says I'll jump from that 5th floor, is there any risk involved in it? Yes or no? Means jumping from the 5th floor. Or second question, somebody goes in front of the train, running train, and stands in front of the running train. Is there any risk involved? Many of us are writing that yes, there is a risk involved of death. There is no risk involved. Why? Because if you jump from the 5th floor, you are sure to die. If you stand in front of the train, you are sure to die. So what is the risk involved? Risk means uncertainty, whether something will happen or not. That is risk. Okay, when I invest in some mutual funds, okay, then whether that mutual fund will grow or not, that is a risk. When I invest in some stocks, whether that stock will perform or not, that is a risk. Suppose if I give loan to somebody, whether that loan will be returned back or not, that is a risk. Okay, so that's why understand the risk as such. Okay, now if I invest in FDs, then if I invest in some commercial bank FDs like nationalized bank FDs, okay, then there is no risk, because you know this is a fixed percentage which you will be getting, and government has given this insurance for this DICGC, right? So organizational risk is a potential for losses due to uncertainty. Uncertainty should be there. Okay, just write in the comment section what all do you feel is an uncertainty. Okay, yeah. Salary in your bank, is it an uncertainty? Tell me. Write fast in the comment section. Salary in your bank, is it an uncertainty? Definitely no. You are a permanent employee, so you'll definitely get the salary. Reliance share will grow or not, is it an uncertainty? Reliance share will grow or not, is it an uncertainty or no? Type yes or no. Correct? It is yes, because you don't know whether it will grow or not. So it is a term for the risk at the top level of an organization that includes material, strategic, reputational, regulatory, legal, security and operational risk. So these are the types of risks which we always face in our business. Okay. So material means what is the material? Means core business risk. Strategic means whether I am going right in the direction. Now what is strategic risk? I'll give you two examples over here in strategic risk. Which companies failed in strategic risk? I'll give you two examples here. One is of that Kodak company. Anyone remember this Kodak? Kodak was a filmmaking company. Where is it now? Second is Nokia phone. Where is Nokia phone now? Nokia was a leader in phones, right? Where is it now? Why? Because strategically it went wrong, right? So strategic risk means thinking on a long-term perspective. Reputational risk means if anything bad comes about your bank or your organization in the newspaper. That is a reputational risk. Regulatory, if you regulatory and legal, you can combine this. So regulatory means if you fail somewhere in compliance. Legal also similar ones. If you fail somewhere in compliance. Security and operational risk. Security means if you don't have sufficient passwords in your bank. If these passwords are open, if these passwords are simple ones, if your banks are not that secure, branches are not secure, that is security. And operational means due to employees, due to hazards also, not only employees. See this. If there is a flood in your area, then also it becomes an operational risk. If there is a theft in your area, if there is a terrorist attack in your area, then also it becomes an operational risk. Okay. So risk can be of various types. There can be 3-4 more types of risks over here which are not covered. Okay. In fact, anything can be a risk, whichever can cause a damage to your reputation and a business. Okay. Now what is this framework then? Risk management framework is a template and guideline used by companies to identify, eliminate and minimize the risk. So the main point in any organization, here, when you are doing the business, it is for sure that you will always have a risk. If you don't have risk in the business, it means you are not doing the business. So whenever you are in the business, you will definitely have the risk. Only the point is you can't zeroize that risk. You can control that risk. Okay, controlling is very important. Here, control risk. That is what we can do always. You can't zeroize that risk at any time. So template companies to identify, eliminate and minimize the risk, right? It was originally developed by National Institute of Standards and Technology to help protect the information systems of the US government, state government. So it was prepared in US, but similar things have been prepared in India also. I'll just show you the basic rule. How does it work? Hold on. I'll show you via image. One second. Yeah. See this. This image will be very simple. Prepare. We can draw it over here also. Prepare the framework. Okay. Then go for categorize. Means which category is important. Categorize. Then third one it will be categorize. Then select the best one which I should target. After categorization, I'll select which one I have to target. Okay, which is the most important one. Then next one, we'll come to this one by one. Implement. Okay, implement it. Whatever process you have implemented, just implement it. You have selected, implement it. And last one will be controlling. Assess, authorize and monitor. Here, assess the risk, authorize it and monitor. Okay. So assess, you can assess and authorize, you can combine it over here. Assess, authorize and last is monitor. Okay. So monitor. So this is basically the logical framework of any risk management. Firstly, you have to prepare. Prepare means what? To execute the RMF risk management framework by establishing a context and priorities for managing security and privacy at the organizational level and the system levels. Means what? See this. At the organizational and the system level. Here, we have to first prepare the framework. Prepare the framework means what? Like in the bank, you have SOP, standard operating process, right? What is that SOP? That is preparing that framework that you have to operate in your bank using this method. So that is preparation of this, and based on this preparation, we have to follow the whole this portfolio of risk which we carry. Okay. Categorize the information systems and the information process stored and transmitted by that system based on the impact analysis. So whenever I prepare this framework, I have to act on this framework, and while acting on this framework, I'll categorize the different types of risks. Now, how do I categorize the different types of risks here? Logic is very simple. Which thing is first and which will hurt me first, that is to be categorized as a priority risk. For example, in any organization, reputational risk is considered the priority risk over there. Why? Because just single news in any newspaper or even any portal now can hamper your business. So categorization means we have to decide which I have to target first and which I have to target at the last. Okay. For categorization, there is a typical framework used, okay, in any banking. The framework used is whatever you have to do it later, means whatever is important but not urgent, that is always done first, okay. Means I'll show you this. I'll draw it over here and then it becomes easier for you. One sec. Yeah. Hold on. Yeah. See this. This is the framework. See this. What we have to do whenever any bank prepares or executes any plan for risk management, it categorizes it into 4 categories. Number 1, it's a rough drawing, okay. Oh. So see this, important, any risk which is important, not important, okay. This is the way we deal with it. Risk management framework is mainly done using this: urgent, not urgent, okay, not urgent. So whenever any bank deals with any risk, it has to look into it that what is important and urgent. For example, any newspaper, bad news about yours, okay, bad news and urgent, okay. Change in any software means where the technology is going, okay. So it is important but not urgent. Technology doesn't change immediately, so change in technology, okay, okay. Then urgent and not important. There can be many things in this life which are urgent but not important, means all the gossips and everything, okay. So forget this. Always bank will focus on what is important and urgent and what is important and not urgent. What we try to classify in any banking is whatever we can target it at important and not urgent basis, that will lead to your peaceful life in the banking, okay. So always focus on this, and these 2 categories you should always try to remove, like gossiping with the friends or some other matters in the organizations. Means many organizations have many trivial matters which should not be focused that much, okay. So important and urgent, important and not urgent one. This is a very important framework for risk management, okay. Then next is select. Select an initial set of baseline security controls for the information systems based on the security categorization. So basics we need to decide first, that before, for example, I'll give you one simple framework in banking. We always have one debit and one credit entry, right? One debit and one credit. So which entry is to be passed first? First credit entry is to be passed or first debit entry is to be passed? Okay, you are a seasoned bankers, everyone. You have passed almost 5 years. Everyone has passed 5 years in banking. So should you pass a debit entry first or should you pass a credit entry first while doing any transaction? Yes. First you have to always pass the debit entry first and then credit. Why? Because if you have passed the credit entry first in your customer to your customer and the system goes off, then the customer will have the credit, but your system, you won't have a debit over here in the other account. So that's why always pass the debit entry first, okay. Then select the initial baseline. This is called as the baseline. This is just one example I gave you. There can be thousands of examples. Implement the security controls identified in the step 2. So whatever I had prepared the framework and categorized it, so there those frameworks I'll implement it over here, okay. Means implementation means what? It's not that simple. Implementation is the biggest problem in any banking system or any organization, because there is a main problem is of the resistance. There is a resistance from the employees for new changes, okay, and that will always hamper your business. Third, assess. The third party assesses the control and verifies the control that the controls are properly applied to the system. Now third party assesses, we always appoint a third party, outside party, to do the audit of the system implementation. Why is it done this way? Because what happens, those who are in the systems may not get the look of, may not get the view of the outside party, or may not get a third party view, or may not get an outsider's view. Look at it from the customer's perspective. So the third party assesses the controls and verifies that the controls are properly applied to the systems. Okay, there various testings are done over the in this phase. Testings means, suppose if I am implementing some system, so from various customer angles, customer accounts angles, the things are checked. Okay, authorize. The information system is granted or denied an authorization to operate. Once these testings are completed, only then the senior management goes and authorizes it to be implemented in the system, in the mainstream. Okay, you can't implement any system without doing the testings. Okay, test marketing, similar to that of test marketing, isn't it? So the information system is authorized to operate, so it goes live over here. Then monitor. Even after going live, for at least first 6 to 7 months, any system is monitored. What all are the flaws in that? What all are the drawbacks? What all are the limitations? Monitor the security controls in the information system continuously in a pre-planned fashion as documented earlier in the process. So we have to monitor the security controls in the information system. Whatever are the flaws in the live environment, because here this is the testing environment. Testing environment and live environment have this is live environment. These two are having a difference of almost 1000%, because live customers can come in any way. We can't do the testing for all the situations which has occurred, okay, or which will occur. So live testing and live monitoring is very important over here. Okay, now let's move on to the question phase. But before that, we have a felicitation program arranged on 8th of January at 12 p.m. The venue is 2nd floor, Tower A, Unitech Cyber Park, Sector 39, Gurugram. It is for those who have cleared JAIIB and CAIIB in December 22. So if you are one amongst them who have cleared JAIIB, because right now you are for CAIIB, so if you are one amongst them, kindly attend it. Adda 24/7 will reimburse your 3-tier tickets on both the sides. Okay, everyone, the link is given in the comment section. Link is given in comments. Okay, comment section. So kindly fill up the form. Okay, for that link, on that link, and do attend this ceremony. Okay, tell your friends also. Everyone, those who have not liked the video up till now, kindly like the video. Type in the comment section yes if you have understood the framework, basic nature, basic steps of the framework. Click on the bell icon, everyone. Okay, chalo, let's move on to the questions. Now you will answer. Everyone answer me as much as possible. The major types of business risk include all of the following except. So which of them include all of the following? Except means what? Price risk, diversification risk, credit risk, and all of the above. So this major types of business risks are all of the following. Forget this except. Okay, will include which of the following. Okay, so major types of business risk include all of the following. So price risk, diversification, credit, and all of the above. So which one is a major risk in any business? Price risk means the price of my product goes down. If I am in banking, then the price of my bonds goes down. If I am in physical business, then the price of my product goes down. Diversification business means if I diversify in some other business, will I get the same returns as I am getting from the present business or higher returns? Okay. Credit risk. Credit risk means there are two types of credit risk. Always remember. One is counterparty risk. Counterparty means if I give some loan or sell some product to somebody, okay, counterparty, or sell some product to somebody, will I get the money from that party? That is one. And second is country risk. Country means if I deal with some XYZ country, is it safe to deal with that country? So that is credit risk. So which are the major types of risk? A, B, C, or D, all of the above? Correct? It is D, all of the above. Got it? Credit risk is the risk that the firm's borrower will not make the promised payments. Okay. Means somebody has borrowed money from me and that person won't pay me back. The risk that the firm will not be able to get credit from the lenders. Means I won't be able, if I am, let's say, any company XYZ. So I won't be able to get a loan from my bank. Is it that risk, credit risk? C, the risk that the firm will not have sufficient funds to make payments to their employees. And last one, the risk due to changes in output and input prices. So which is the credit risk in that case? Just now we saw it, isn't it? Credit risk was of two parts, counterparty and country. Counterparty means what? Counterparty means, correct, it is A, the risk that the firm's borrowers will not make the promised payments. Remaining all, these are the risks, definitely. B, C and D are the risks, but these are not credit risk, okay? All of the following are the types of price risk, except. So which one amongst these is not a price risk? We want except. Which one amongst these is not a price risk? Commodity price risk, exchange rate risk, stock price risk, and interest rate risk. Which amongst these is not a price risk? Yeah. Commodity means, let's take few examples. Gold. Gold price can go up or down. Is this a price risk or no? Type yes in the comment section if you agree that this is a price risk. Commodity price risks. Is this is a price risk? Type yes. Yes. Okay. So I'll write it true over here. Or yes, I'll write it yes over here. Exchange rate risk. Exchange rate means dollar. The dollar will go up or down. Is this a price risk? Yes or no? Everyone. Yes, because I have to purchase dollars. If I am in the banking business, I have to purchase dollars from the market. Stock price risk. So is this a price risk? Means my price of, let's say my stock is, let's say Reliance. Reliance goes up or down. Is this a price risk? Yes. Right? Interest rate risk means the interest on the FD may go up or down. The interest on the loan may go up or down. Is this a price risk? No, this is not the price risk, right? So this is the correct answer what is required, okay? This is known as interest rate risk, means the rates on the FD and the loans going up or down. Got it? It will lead, here, interest rate risk leads to price risk. It leads, okay, but it's not a price risk. If my rate of this loan goes up, then what happens? The customers won't be able to repay the loans many times. If the rate of my bond, interest rate of my asking rate of my bond goes up, then the price will come down. So interest rate risk leads to price risk. Okay. Which of the following is not an example of direct loss from the business risk? Means not an example of direct loss. It is not a direct loss. Let me see. Loss of profit, damage of assets, cost of paying and defending liability claims, and employee turnover. Which of them is not a direct loss to me? Loss of profit means my money goes down. Simple. Loss of profit means I am in the negative cash now. So is this a direct loss to me? Yes or no? Loss of profit, is this a direct loss to me? Correct? Yes. Damage of assets. My assets are damaged, so I'll have to repair them. So is it a direct loss to me? Yes, of course. Cost of paying and defending liability claims means there are some liability claims. Let's say I invoke some guarantees invoked against me. Means I give a guarantee and the organization asks me for the money. So is this a direct loss to me? Yes, it is. Employee turnover. Is this a direct loss to me? Means some employees going, some employees coming. Is this a direct loss to me? No, it's an indirect loss. So this answer is no. So is not an example. So the correct answer is D over here. Got it? ABC Winery is attempting to identify its core business risks. So now this winery, remember winery means that company which prepares wine. So it is attempting to identify its core business risk. Which of the following is an example of an indirect loss to ABC? See here, it should not be a direct loss, indirect loss to ABC. Okay. Loss of grapevines due to hail. Hail means that due to heavy rains you can call it. Okay. Hail means generally it is the snow particles which fall down from the sky. Okay. So loss of grapevines due to hail. Is this a direct loss to this company or indirect loss? It is correct. Direct. Okay. Employee health problems due to insecticide usage means employees get affected. So if employees get affected, this winery business is mainly dependent on employees. Okay. So is this a direct loss to them? Direct financial loss. Yes. Yes. Third one. Loss of profit due to bad publicity after a liability claim. So loss of profit due to bad publicity. Now bad publicity means it comes from the newspapers, right? So newspapers is an indirect loss to them. Bad publicity is always this is known as the reputational risk. This is always the indirect loss to that company. Direct loss means what? My materials going out, wearing out, my employees getting in a problematic state. Then D, cost of replacing the equipment after the fire. Now this is also direct loss, means due to fire my equipment is lost. So in that case, what will I have to do? I'll have to replace it immediately. This bad publicity, I can give tomorrow a new ad in the newspaper or new interview in the newspaper clarifying all the bad publicity elements, right? So this becomes an indirect loss to the to ABC, and all these remaining are the direct losses. Okay. So the correct answer is what? A, B, C or D? Everyone, it is C. Okay. Now these are the two new batches for CAIIB. We cover all the 4 important topics: ABM, BFM, ABFM and BRBL. Both they are in English and bilingual. You can join as per your preference. And also remember the code Y432. There you get huge discounts for these codes. Okay. So join these batches ASAP. I'll show you how to get the discounts on this. See this. Go to Adda 24/7. See this. On Adda 24/7. If you're having the app, I would suggest go on the app. Okay. In the app you'll be getting 1% extra discount due to coins. Okay. So click on JAIIB and CAIIB. Once you click on JAIIB and CAIIB, click on CAIIB 23. Okay, you are in CAIIB, so don't go for JAIIB now, right? CAIIB 23. Then you'll get all the batches over here, right? Click on this English batch. See this batch. Read the details for this batch. All the details are given. I'll read the important ones. Ebooks are available at for regular intensive practice. Then second part is this. 24/7 recorded videos are available. All the subjects are covered. Numericals, objective questions, theory, whatever is required will be we cover it over here. So 23,999 is the fees part. Click on view offers. Put the code Y432. You'll see the huge discounts over here. Put the code Y432. Click on apply. See the discount offers 77%. Okay. So 23,999 reduces to 5,519. It's a huge discount for everyone. So go for it immediately. I would suggest rather than going in for single batch, go for this Mahapack. Mahapack means what? It's a bunch of batches or club of batches. Okay. So the JAIIB, CAIIB, Mahapack. Click on this Mahapack. Once you click on this Mahapack, click on this CAIIB ka Mahapack. Okay. Here, if you see the Mahapack, you'll see 15 plus batches for all the 4 subjects. Now, if there are 15 plus batches, and even if you attend a batch singly, then also you'll learn the subject, isn't it? 15 plus mock tests are available, recorded videos are available anytime, highly experienced faculty, detailed subject-wise expertise is available, and also, now look at this, the fees part, 35,996. Click on view offers to see the discounts. Put the code Y432. Click on apply. See this. Now 35,996 reduces to 8,279. It's such a huge discount, isn't it? Go for it immediately. Why? Because here the new portion of CAIIB is not the same as the earlier one. New portion is having many difficult subjects as such, and also the compulsory subjects have been changed. See this. Earlier you had only 2 compulsory subjects, ABM, BFM. Now you have ABM, BFM, ABFM and BRBL. So banking, advanced business and financial management, banking regulation and business law. These are the 2 new subjects added. Also look at the electives. Electives, there is no retail elective. Now you have rural, HR, IT, central banking and risk. Okay. Negative marking, they have removed it. Just now, yesterday we have got, 2 days back we have got this information, right? So negative marking is removed. That's why I say subscribe to Officers Adda 24/7 YouTube channel. Here you get all the updates of whatever is happening in JAIIB, CAIIB and various banking exams. So negative marking is removed, but subjective questions have been kept. Subjective means you will have to write the answers, you'll have to solve the problems. Okay, so that's why go for it, go for the batches immediately. You will be needing this. Okay, Chalo, bye from my side. I'll be back tomorrow with another session. Till then, bye.